Hey guys, so I want to take you through a bit of price action which should happen on Wednesday. We're going to go through multi-timeframe analysis to get to what I saw as just perfect price action throughout the entire day. I've marked out between the two red lines literally just to mark Wednesday. So Wednesday starting 11 PM, so pretty much just after spread hours, through till 9 PM, which is the following day's spread hours. Okay, so looking purely just between here, we're just going to take a quick glance at what price action was beforehand, so you can see what my thought process was, because the results were absolutely phenomenal. Now, I don't want to give you false pretenses and say that I got on all these moves. I actually got in one move, and the one move was a fail. Okay, so I actually got -1 on Wednesday, but if you could have been at the charts all day and you focused on the smaller time frames whilst looking at the bigger picture, you could have probably 60 or 70 R by the end of the day. So we're just going to go through this. So looking at the daily, first of all, what you want to do is try and figure out pretty much where the order flow is. All right, so the order flow is working its way down. Price is going down. All right, so this is EURUSD. We've been going down since like July last year, so literally like a year of dropping. And we are on what could be a pullback, could be the reversal, we don't know. We've just had a bit of in the last week or so, we've literally had a reaction to a weekly time zone from about 20 years ago. All right, so literally 20 years ago, we had this happen, a little bit of a break of structure, price took off from there. This is potentially the turning area for EURUSD, potentially. All right, doesn't mean that it's going to be, but it might be. So we drop down to the daily, just double check our positioning. What we have is our most recent high up here, or most recent really valid high, swing, let's call it a swing high over here. Had a break of this low, worked our way down to the weekly time zone. We just got past the halfway point of the weekly time zone, which was about here. Had a strong rejection off of it. Let's zoom in a little bit closer. Alright, so the halfway point on the weekly is right here. We had a strong rejection off it, which is great. There was a potential daily right here as well, where you could have just got in, which is great. Could be climbing the market now. But essentially, because we are between here, and we did get this minor break of structure right here, it looks as though short term, we are working our way up. There's a couple of areas which are standing out to me a little bit. There's this white candle up here, which is an obvious point of interest, which I'm going to be looking at in the near, well, if price comes back up to it and staggers up to it, I will hopefully be looking to get short. We've got a huge imbalance just here between that candle and this candle down there, and a H4 order block further along. Okay, so we're nowhere near that. Technically speaking, we shouldn't be looking at going short because we've had a minor break of structure, so a very small pullback right here, break of structure, working our way back up towards this imbalance. If it reaches beyond the halfway point on the imbalance, I'll be looking to get short from this H4, which we'll zoom into in a second. Right now, actually. Okay, so the H4 is just a minor candle, small candle, but still it could hold. And the most recent price action is really just sort of white candles, so we're looking at going up. Okay, we've had this enormously strong push right here. May have been a news event, I can't remember. On 19th of July, but within a 4-hour period we get 115 pips, which is pretty good. And then we just had a little bit of sort of floating around. Now, because we're going to be looking at Wednesday, don't worry about anything which you see beyond this red line. Okay, so I'm just going to drop back to the bar replay tool and get just Wednesday. All right, so we're going to be looking hindsight. We're not going to be doing bar by bar replay, but just want to show you really the power of this strategy. Now, the point in which I thought that we were going to have a pullback and continue up was right here. I was very conscious that we do have a huge imbalance right here, okay? There was no need to mark it on charts, it was just huge, all right? This is the imbalance, huge gap, all right? I knew that was there. Did I think that price was going to come down to here to fill up the gap straight away? Probably not, because quite often you'll just get a minor pullback after some consolidation and shoot off again in the opposite direction, or in the continued direction, sorry. Now to find that, I had to drop down to the 15-minute and then to the 5-minute. 15-minute, we had nothing, apart from we had this. Let me clear this stuff out the way just for the moment. If you look at this wick here, and then price came down to tap it here, it looks as though we've got potentials kind of liquidity just underneath here, with every possibility that price could come down to, like it did here, come down to tap in a little bit lower and continue. But what I needed to find was an order block, something which was it was going to stand out to me, maybe like an inside bar, something which had happened somewhere around here. So we could grab a liquidity from there, get triggered in on this probably inside bar, and shoot off in the continued direction. So I had to drop down to the 5-minute to try and find this. Now, the risk which you have with the 5-minute when really looking at the 15-minute and the 4-hour is the 5-minute. Quite often I find that you're just kind of looking for something, especially with this pullback type of move. You're just trying to find something. Once you see it, you think, yeah, okay, I can go with that. So I found it. All right, so price came up. We had a wick, an inside bar, well, almost an inside bar, and then, you know, take off again, where we clearly broke this wick, which is great. So I thought, yeah, that's valid enough. I'd be happy to get in on the 50, you know, the halfway point, the 50% zone. So liquidity underneath here, underneath here, and I think it was somewhere around here. It was probably about 9 o'clock where I placed my order. So it was just when price got down to about here, I thought, yeah, fine, I'll get into this. If it taps me overnight, it's only giving me a tap and off it goes. Well, you'll see in a minute that, you know, it basically, here we go, it just shot straight through. Now, one thing that I didn't do, which is, you know, not idiocy, but looking on hindsight, it's like, yeah, I do need to pay wider attention for charts. Now, I'm going to draw that across. That's literally just showing that it was broken by a wick. Now, I didn't think anything of this when I was looking at the charts just here. I was like, okay, it's starting to slow down. Typically, we'll get a sell-off. When you got a zigzag move up, usually an aggressive move down, zigzag move up, aggressive move down, get into this, you know, this pullback area here and take off again. What I should have done is looked further left on the charts. Now, I tend to leave a lot of my drawings on, but for some reason, I didn't drag them across. Okay, so we're just literally going to drag this all the way across, and this should have saved us a few issues. Okay, so let's get that lined up properly. Come all the way back across to where we are now, and hey, look what we have here. If we'd got involved on the, you know, on the 50% mark or even the 20% mark, we'd realise that we'd actually run into quite a substantial pullback in the market. Okay, so aggressive move down, zigzag up, an attempted move down, didn't get a break, pulled back up, cleared liquidity from above all of these highs here, and then a very aggressive move down. Now, I didn't have this, you know, the sort of 0, 25, 50, 75, I didn't have this pulled across on my charts, which I wish that I did in hindsight. Okay, so we tapped into it and we pulled back. We came up, we didn't break a new high, you know, that's warning sign number 1. And price came back down again, didn't create a new low. And then just a very slow stagger, which is kind of what I like. But look at all this kind of mess. All right, there's a lot of mess, very messy price action. And what did happen? Now, this next day, literally Wednesday, all day, I wasn't at the charts. I had this pending order on. And I thought, you know what, I'm going to leave it here. It's a very, very good risk-reward ratio. You know, the target was literally up here, which was, let's zoom out a little bit and see if we can make sense of it. Going past all the gap in the imbalance and get into this H4. Okay, so really looking at the next kind of realistic target. All right, looks huge, you know, 1 to 30, but it's not unmanageable. All right, so drop back down to the 15. I'll just show you what happened on price action. Once we had got this, okay, we'd got a wick break of this high. All right, so price had worked its way up, shot up, you know, a wick, pull back a little bit, wick, got involved with this order block over on the left, over there, and then we didn't break above that order block. Okay, we didn't break above it, but we broke this high, again with a wick. So we're left with a beautiful looking pin bar. All right, so brilliant pin bar. You know, this was 8:15 in the morning. I think I had seen this form before I left the house, which is really frustrating. And then this candle. Okay, if I had stayed behind for this candle, which I physically couldn't have done with my time, I would have been cancelling this order. All right, I should have done when I saw this form, okay, this pin bar, but I went against my instinct, went against my previous sort of trading strategy, and went, no, I'm going to stick with it. Anyway, hindsight is a great thing. I ended up with -1 a little bit later on in the day. But if you had a little bit more time, you could theoretically drop down to the 5 minute and to the 1 minute, okay, where there's all of these beautiful entries. Now, I'm just going to point out, because we've broken this key sort of area with a wick and just been pressed down and then pressed down heavily, you could pretty much mark up, you don't have to, but you can pretty much just mark this up as one aggressive move down. Now, if you group these together, that's an aggressive candle. And then essentially you've got the same thing replicating here and pretty much here as well. And then further down, all right? It kind of works a little bit like that. So if you drop down to the 1 minute, if you do sit and trade all day, you would have been able to spot that and think, right, okay, on the 15 minute, we've got a pin bar rejection. It's literally just wicked it. We're probably going to be working our way down. Any order which you had here, you'd have cancelled. Despite there being liquidity there, you'd think, right, okay, this has come down. Grab that liquidity which I was waiting for, and then the stagger up. So you'd be noticing this stagger over the next kind of hour or so, and you would be looking for areas to get involved in market. So if you understand the trading strategy, which the guys in Discord are probably going to know it a little bit better than the guys on YouTube, essentially we're looking at areas where the demand turns into supply and supply turns into demand. So this area right here is the last real kind of push up which breaks above here. Which breaks above there. Alright, so we got a nice push up. Again, we got another push up there. This was another area where you could have marked up on your charts. So we got another break there, but then we also had our sort of switch from demand into supply right there. So there was another potential order block, essentially, the way which I describe it, up here, but you also have this kind of, I guess, flip zone right here, right on this doji candle, right? You could say that it was this one, but in reality it's going to be this one. It's the one which is prior to the break. The break happened just there. This one didn't break. This was the change of direction, essentially. So the price shot all the way down and it just started zigzagging. Once you get into this zone, you can get involved on, say, the 50% or the 25%. I'm actually going to do all my entries on the 25% just to show you what it would turn out to be. Now, you get into it, if it reached 50%, great, okay, you'd be in. But essentially, let's get short right here on the 25%, right there. This just on the high, which is there, a 2.6 pip stop. Let's get rid of that one because it's literally just replicating this. And our first target is just going to be this low. Right, because this is the lowest point which it got to before it started staggering its way back up. That in itself is a 1 to 12. Okay, 12% gain on your account if you do a 1%. Incredible. You could have, we didn't really get a break of anything substantial, so really you wouldn't be looking to scale into any of these. And if you did, try to scale into these, you'd have got stopped out, okay? Because the main order block was actually over here, or the main point of interest. I need to stop saying order blocks because people are comparing it to other things which they're not. But then what do we do? Okay, work our way up. We do get a break of this high. Okay, so we get a break of this high right there. And what do we get again? A wick rejection. Okay, a pin bar forms, followed by an aggressive move down. Now, when I'm on the 1 minute, I don't care so much about 1 minute pin bar breaks when we're going averse, in the opposite direction. Okay, so this I would have classed as my break of structure. Now, with that in mind, because we got a break of structure, and yes, it is quite a huge wick, but because we got a break of structure, I would always take the chance. Okay, I would take the chance on forming another. Let's just clear some of this out of the way so it doesn't get too messy. But I would always create a basically an entry point just off of here. Now, this being the lowest point, so let's work this out a little bit closer for you. Work our way up, get the pullback. Price comes back to here. Price presses down, presses lower than this candle, and then works its way up to there before rejecting away. So the lowest point is actually on this white candle right here. Okay, right there. So from there to here is the point of interest, what I would class as the order block to focus on. Now again, if you go from the 0.25%, or sorry, the 25% mark on this order block, you would literally just get tagged into it by literally like 0.1 of a pip, or maybe not even that, maybe just pin perfect. All right, and again, where do you target? You target the same level as this one, so just the absolute low of this previous leg, which is there. Okay, so straight away, within the period of, let's say, it's about there, it's about an hour and 15 minutes, and you'd have got, what's that, 12 plus 8, 20. Now, it's not over, okay? So as we saw this happen, okay, there was a press down. We need to see a break of this before we could even consider getting into another scaling. Okay, so you get another break of this low, and what happens on the break of this low? We get this pullback. What does that pullback represent? That represents another opportunity to get into the market should price come back to it. Now, of course, price is starting to sort of like stagger its way down a little bit, which usually means that there's liquidity forming along the tops here. So I'd be a little bit skeptical, a little bit nervous about setting an order on this, but it is so perfectly placed in line with this break. So with that, because you'd already be up, be floating up on these two, probably a combined 5 or 6 R, you'd probably be quite comfortable getting involved in this trade. Okay, so this, all of this at the moment is hindsight, but essentially, if you were to follow this as is, let's just work this out real quickly. Where would price be? You'd be up 2 on that, which means on this one, you'd be up about 5. So yeah, you'd be up about 7, which is great. So you could set another order on here. So what happens, price comes into it, actually comes really close to the top, and away you go with another order. Where's that order's target going to be? In the same place as these two. So yeah, as soon as this one takes profit, these two take profit at the same time. So you're up 12, 20, 29. Yeah, so 29 are at this stage, and it is only 11:30 in the morning. All right, so your first entry would be pretty much 10:20. You'd be up, what did I say, 29R by 11:30. So that's 1 hour, 10 minutes into the markets, and you're laughing your head off. All right, and if you're like me, you'd have kept hold of this trade, and you have one loss, and that's fine. But one loss with 29, that means that you're up 28. Now what happens here as well? We get such an aggressive sell-off. There's literally nothing which happens here. Okay, so this was the target which we needed. Uh-oh, what's happened here? Bear with me a second while I reload the chart. Sorry, I don't know what happened there. My computer froze up a little bit. But the low to break was essentially this one, okay? It's where we'd taken profit on everything. But if you look at what had happened when this low had been broken, there was nothing but imbalance, all right? So there was imbalance in the market between there and there. So what does this mean to me? Well, because this was the low which was broken, the imbalance is probably going to be used as bait, all right? So it's probably going to be used as bait for price to come into it, probably do a little bit more of this dancing around, probably not react to the halfway point, which to be fair, it kind of did, but come up to the next conceivable point of interest, which is the last reversal, all right, or the last pullback. And so what could you have done here? Literally just place your order on the last section, which is right here. This was the break, and you just, let me just clear some of this out of the way because we'd already been in that trade. You could literally just mark out this last push up and that one there, and you can say, right, okay, I'm going to get involved on the 25% if it comes back to here again. Now you got to follow the price action, all right? Just literally, I talk about this all the time. You got the aggressive move. You get an attempt to come back up to a main sort of area, pull back down. You don't break this low. Then you get a bit of a zigzag, zigzag move. You get a bit of temptation right there. Price isn't super clean, it's not all white candles on the way up. Like this is all blue candles on the way down. This isn't all white candles, it's inside bars, it's a few pullbacks, and then it slowly works its way up. Once it reaches this section here, you should literally be able to see, literally this high, those highs, that high, that's all going to be used as liquidity, all right? So there's liquidity just above these, all right? Liquidity right there, which means that price has every chance in the world to press just that little bit higher. Now, if you go off the 25% mark of here, you would have literally just missed this trade, all right? Just missed it. So that didn't quite come in, it would have been there. But if you had taken part using FTMO or a wider spread broker, like I wouldn't have entered this off my broker, it's pretty much like 0 or 0.1 pip spread. This you needed 0.3, you'd have probably been tagged in if you're on an FTMO challenge or an account or something like that. But where's the target for this? It's just the low. It's the low of this section, which is right here. Alright, right there. That's where the target is. There's no reason why it can't reach that target. Alright, so that one we didn't get involved in using this strategy, but still, it's another one which, if you were using a different broker than me, you'd probably be tagged in. Now, working our way down, okay, the obvious key area, the key target is down here, but still you need to consider what lows are we breaking. Alright, so once we get the break of this, we could really start looking at pullbacks to be getting involved with again. Okay, so we could mark up here for another potential entry, which I don't think that we get. But we keep on breaking these lows. Okay, so we're getting a break of the low and a slight pullback. Get a break of this low, only by a wick, which is indicating that the market is ready to start slowing down. Get another wick break. Get another wick break. So see how it's just starting to ladder itself down, just starting to stagger really, really slowly. Get another wick break there. Then we start getting the body breaks real slowly. Then we get equal lows all the way along here, which is great. But because we're getting all of this and we have had the break and we had the body break, we can finally start looking back to see where there's another area to get involved, another point of interest. So the first point of interest is obviously this engulfing candle. It's engulfing, it is an outside bar. Outside bars are fantastic to get involved with. So where do we look for as our point of interest? We look actually at the low of this, basically the one on the left of the outside bar to the high, okay? Because price came down to there, must have pressed down, worked its way up, went up to there before it broke the low. All right, so this is the whole zone. This was marked on in a rush, so this is what the entry would have been right there. Price came into it, tapped into it, didn't break the low right here, but you could have got involved with a second opportunity to miss that. But this is a 1 to 13 trade, which is great. Now, once we get a break of, let me just move that out of the way now. So you've already seen there's an absolute ton of entries to be able to take during this day. Let me try to squeeze that out of the way as well, because we've just used that. Don't want to have too much on the charts at the same time. I'm going to show you the next entry. Okay, so we've got a break of this low now, which is great, which means we can start looking at other areas on the chart, usually the furthest away point of interest to get involved in, which is what has formed here. So what happens, price comes down, we get a wick break of this low, we had an attempt to go back up, we got a break of this high, get a little bit of imbalance on the way up, which means that we can actually set our order on the 25%. Get involved right there. See, these stops, by the way, are really small. 3.6, 4.1. Why? Because we're using a 1 minute. Then again, where are we targeting? We're targeting the low, which is down here, yet again. Alright, so we're targeting the low, which is actually there. The target is 11.32. We'd also be in this one, which is 13.78. Once they reach, obviously, which is great. So, which one were we just looking at? I think it was that one. Yeah, just get tagged in, which is superb. Once we get a break of this low, we can again start looking at the order blocks on the way up. So there's a couple, there's one which you could have got involved in right here, which is pretty much an outside bar. Which would be a very valid loss to take. Alright, so we should mark this on the charts as well. this would be a valid loss right there. All right, so let's just to speed things up a little bit, let's put it right there and keep it on the chart. So that would be a -1 right there. But I could also go back up to this one, which is the pin bar rejection. Superb, the strong aggressive move down. So our orders essentially get placed on that candle itself. Again, we're looking at the 25% as an entry right there. Let's get that lined up correctly. Lock it on. And again, we just get tapped on the 25% zone. There's another 11 or 1 to 11 order. And then what we're doing, we're looking for a break off of this to initially start looking at other pullbacks to get involved with. All right, we do have, this is one which personally I wouldn't do, but it would work out if you did do. But essentially, we've just had the break of this section here. We got a minor pullback right here. I don't think I've grabbed anything there. Get a break right there. And then we get the aggressive push down. You could theoretically, literally, mark this section up, which obviously, if you did do, you could be getting involved again. The reason why I wouldn't do it is that it is post-break. The one which I have interest in is actually up here. The reason for that, okay, the reason for this one being the interest is that we've actually got a bit of imbalance here. Between there, that imbalance will be used as bait effectively to come up and tap into here. But you could still always use this one because it's quite a juicy sized candle. It's not an inside bar, it's just a very large candle in comparison. But hey, let's say that you did get in on there. You're getting involved on the 25% once price comes back to it. Quite an aggressive pullback though, so you'd have, well, you wouldn't have much time to decide, but you'd still be going for it. And where's the target going to be? It's only going to be here, but still a 1 to 6, not too bad. And then you'd probably call it quits when it's getting to this sort of time at night. All right, so you're pretty much done a full day's worth of trading from all the way over here. Oh, sorry, not over there. Probably more like over here. 8 or 9 o'clock. You'd be watching, seeing this pullback happen, and think, right, okay, this is actually deciding the direction of the day. It's at the peak time. London open is usually the direction for the rest of the day. So when you start off with a nice juicy rejection, you can pretty much just guarantee, well, not guarantee, but you can pretty much say it's going to be going down for the whole day. And especially when you get this kind of price action for next hour and the aggressive drop-offs, you just know to get short. And literally just using the same pattern over and over and over again. We're not looking at all this kind of SMC concept type stuff. We're just looking at the pullbacks. Really, really simple. Pending orders. You don't have to be any more amazing than that, but Wednesday in particular was incredible. So if we tallied this up, all right, we had all right, I'm just gonna do this in my head. -1 plus 12. So let's just tally up the wins first. 12, 20, 29. Did we get involved on that one? We didn't. 29, I call that 14 just to round it up. 30, 43. That one, 54. This one, 65. And that one, 71. And then minus 1, so 70. And minus this one, which I left on, you would have taken off, but it's plus 69. Not a bad number. Somebody's favorite out there for sure. But 69% in reality, because it would be pending, it would still be on, and you'd be on from about 8 AM. Let's go from there to there. 10 hours. 69% in 10 hours. Not too bad. So 69%. Tell me if you can find a better strategy. Actually, don't. I don't want to know it. I just want to stick to what I do. Fairly frustratingly, I wasn't in any of these apart from the one loss, which shouldn't have been on there. Yeah, guys, look, if it's helpful, put something into the comment section. The more you like and share and comment, the more it helps the channel. I know it's been a while since I've created a video, but I've been working really hard to try and fill the gaps of knowledge on this Discord server. It will be opening. I know I say this every time I create a video. There is a link below. Literally fill out the form. I will be selecting people in over the next couple of weeks to come in, just test the content, give me your feedback, and then I will bring in the majority of the next sort of couple of hundred. I'm blown away. There's about 300 people who have filled out the form. Actually, the last time I looked, which was today, it was 269. I remember that. So yeah, not bad. But guys, if this has been helpful, there are going to be these kind of breakdowns pretty much every day in the Discord server. All right, I don't want to overcommit to everything, but this is pretty much, I'm not going to be creating videos all the time, but you know, you're going to be seeing all of this just to give you a little bit more confidence in the strategy, in your strategy, and for everybody across the community. So again, thank you. I know it's been a fairly long video just to break down 1 day's worth of trading. And yeah, just looking at the 1 minute, I don't use the 1 minute too much anymore just because of time constraints. But if I was in front of my PC all day, I probably would have done. So yeah, 6-9%, not too shabby. Cheers.